What's going on? I hope you're having a good day, and welcome back to Option Insights Brilliant Breakdowns, hosted by me, Aaron Brill. And so, as per usual, in this fourth episode of Brilliant Breakdowns, I'll be doing my best to quickly interpret some of the more advanced or sophisticated jargon that you may hear professional investors such as Imran use when talking about markets. And in doing so, hopefully make it a bit more simplified for the everyday retail investor, such as yourself or myself. And that way we can all better follow along with the advanced conversations like the ones you may hear on our weekly Macro Insight membership call, or amongst our awesome cohort of like-minded investors and traders in the Macro Insight community. In this breakdown, we'll be doing something similar as to what we did in episode 2 of Brilliant Breakdowns on calls versus call structures, where I'll actually be featuring 2 clips this week instead of 1. The first coming from Imran as per usual from our April 26th Macro Insight membership call. And then we'll once again lean on our good friend of Brent Kochuba of SpotGamma for a clip on the HIRO indicator. With these 2 highlights, I hope to help bring you some clarity onto today's topic, SPX put selling, HIRO, and Vanna flows. In the first clip, we will hear Imran point out a backwardation in the VIX that led to the market selling puts, followed by Vanna flows to support a move up in markets. And then later on, we'll jump to that clip of Brent describing SpotGamma's HIRO indicator, which Imran often utilizes. And this way we can better fully understand his analysis. Sound good? All right, let's jump in.
VIX term structure did briefly hit backwardation intraday. So you see there, it got to 29-ish on the front. It was a little bit above 29. And then we started to see the vol selling come back, basically, right? We saw a load of put selling, HIRO indicator there on the right. You saw that spike up in the pink line driven by put selling early in the day. And as those dealers started to get filled and that kind of spike in vol started to mean revert and subside back down, that was when you got your delta hedging coming in through the Vanna effect, and that took the market higher, right? So you saw the S&P there trade up, after that put selling initially, then, that stabilizes, and then you saw the rally happen sort of, and after the European close, it kind of accelerated as well. And you also got the news about Twitter come out, Elon taking out Twitter, and that got the market a bit excited in general as well, right? So there's a combination of all those factors.
So real quick, before we dive in, if you do need some more background on just the VIX in general, be sure to go check out the Options Insight Trading 101 series video that goes over precisely that and is linked in the description below, along with any other videos, links, or references that may be mentioned in this breakdown. For our sake right now, what we really just need to fully grasp is that by being the volatility index, what the VIX is tracking for us is uncertainty. And what is generally more uncertain, the present or the future? I think the obvious answer is the future, as the future is unknown, and there's nothing more uncertain or volatile than the unknown. And this is why you can generally expect VIX futures contracts to be priced higher as you look out into the future. However, there are moments in the present of high volatility. And when this happens, what you get is this trend temporarily reverses and the VIX level goes down as you look out into the future. And this is called backwardation, when futures price something out as being more expensive right now and cheaper as you go into the future. And this is what Imran flagged led to put selling on the S&P. Now, this would be appealing to put sellers because the level of the VIX also tells you the premium being placed on options contracts at that point in time, meaning a VIX going into backwardation would actually provide an opportunity for people to sell options at what they almost know for certain is to be overpriced. Now, let's quickly pop over to Brent's SpotGamma video on the HIRO indicator before we keep moving deeper into Imran's analysis.
What you're seeing on your screen here in this chart is the key element here to the HIRO dashboard. This is the real-time deltas from all the options that are trading. And so the blue line is the options deltas driven by puts, the orange is the options deltas driven by calls, and the black is the stock price. So if you see the blue line trending higher, that is telling us the traders are selling put options. If it's trading lower, that's telling us the traders are buying put options. And conversely, on the orange line, if the line is trending higher, that is telling you people are buying calls, right? Positive delta trades. And conversely, if the orange line is dropping, people are selling calls. So that is a lot. If you refer back to the matrix that I mentioned here, you can kind of fill that back in your mind if that was a little quick for you. But basically, what we're saying here is you can see with a new lens, right? What is the flow coming into the market? Is it positive deltas or negative deltas? As a result, do we think that dealers need to buy futures and buy stock, or do they need to sell futures or sell the underlying as a result?
So now you probably noticed that Imran's HIRO indicator looks slightly different than the one showcased by Brent just now. But everything he said remains true, as the pink is just a combination of both puts and calls. So keep in mind, like Brent said, this pink bar is tracking the delta positioning for options positioning in the market. So if the market is selling puts or buying calls, thus going long, the dealers are on the other side of those trades and being forced to short the market. They then need to hedge this position by going long the underlying or futures, and that's what would show up on the HIRO indicator as the pink bar, like Imran pointed out. This forced positioning of dealers to buy puts and sell calls leaves them short delta and short Vanna. And so to keep things simplified for the sake of this video, what this basically means is that as volatility comes down, which is usually followed by prices moving up, the dealers will actually become even more short and feel even more pain and more losses unless they hedge even more by buying more underlying or more futures and then pushing the price up even more from there. The circle of higher prices leading to more hedging, leading to even higher prices, is that very Vanna flow effect that Imran pointed out in our earlier clip. So as this volatility calmed down and the VIX backwardation eventually corrected, the put selling seen throughout the market led to that Vanna flow hedging by dealers, which then ended up pushing the market right back up to 4,300 on the S&P, as Imran pointed out. All right, so that is going to wrap it up for this episode of Brilliant Breakdowns. Once again, a big shout out and thank you to Brent Kochuba and SpotGamma for being such awesome friends to Options Insights. Their HIRO indicator is a great tool for helping you interpret market action, so definitely go give that a closer look and go check out the rest of their offerings. So I hope you found this video to help deepen your understanding of how volatility and options position can dictate market movement, but whether or not you found this breakdown helpful, please leave your feedback below. And make sure you check out the rest of the excellent content being put out by Imran and the Options Insight team on this channel. Speaking of which, Options Insight is preparing a special edition of our live options trading bootcamp hosted via Zoom, where Darius Dale, founder of 42 Macro, will be learning right alongside you as a guest student. So if you happen to also be a 42 Macro subscriber, we are offering 20% off to the first 10 people that sign up as 42 Macro subscribers. So be sure to check your emails from Darius and get that discount code. So that's going to wrap it up for me. I'll catch you here next time for episode 5 of Brilliant Breakdowns. You have a good one.